Caroline Woods joining us. Is there any deal appetite in this world, Caroline? I know there's been talk about TikTok, so I'm thinking more like TikTok, watch out for this market. TikTok!
Well, yeah, TikTok, the clock is ticking, of course. The Saturday deadline is fast approaching. And from all the reporting that we're seeing and hearing, there's no shortage of interest for TikTok US. I will say Amazon, we know, threw its hat in the ring at the last minute yesterday, according to that New York Times report, and then the White House confirmed that report that Amazon submitted a bid. Just to take a look at Amazon shares quickly, as you can see here, they're down 7.5%, likely on that tariff news. Third worst performer in the Mag 7 today, behind Apple and Meta. But Citi is actually out with a note recommending to take advantage of post-tariff weakness in Amazon, and actually highlights the potential synergies should Amazon succeed in that bid to acquire TikTok US. As TikTok Shop, which generated $9 billion of US gross merchandise volume in 2024, and also TikTok's strength across influencers could really accelerate Amazon's product discovery efforts. They also see multiple advertising benefits, given TikTok's 170 million US monthly active users who spend 70 minutes plus per day on the site. So
70 minutes? Oh my goodness, that's
it's
crazy.
Amazing the rabbit holes you can fall down.
Man,
and just
that's
from my
so
own
bad,
personal experience.
They're only like, how long is a typical TikTok, Caroline? I mean, that 70 minutes of TikToks is a lifetime of TikToks.
It depends. They can be super quick, or they can be actually quite long, and then I scrub through. But I think that it's also an interesting combo, because I have found that several of the influencers on TikTok don't just funnel business to TikTok Shop. They actually already funnel business to Amazon. There are a lot of influencers out there who are peddling Amazon products. So could be an interesting combo. I just want to go back to Citi, kept a buy rating and a $273 price target on Amazon shares, which are down almost 8% today, trading around 180 right now, 181. So down about 17% year to date. Actually negative on the one-year chart now as well, with today's weakness. In terms of other reporting about that deal, we know that from the New York Times, and then I said the White House confirmed that report. Apparently, the offer from Amazon came via a letter addressed to VP J.D. Vance and Howard Lutnick, the Commerce Secretary. According to the New York Times, various parties who have been involved with the talks do not appear to be taking Amazon's bid very seriously. It seems like, I will say CNBC also reported that AppLovin is interested in the deal as a potential suitor, thinks they can monetize traffic and data. If you take a look at AppLovin shares, they're selling off quite a bit today as well. The Wall Street Journal reported that AppLovin is also in talks with Steve Wynn about potentially backing that deal. And there's, of course, the reporting around Oracle and Blackstone and Silver Lake potentially, not an all-out sale, but investing and bringing ByteDance's ownership down to below 20%, so that it's no longer Chinese-owned. It seems like the reporting is that is the most likely of scenarios in terms of a deal happening, but the deadline's Saturday, so TikTok US faces the potential ban if that doesn't happen. But Amazon very much in the running, so we'll have to see how that actually impacts Amazon shares moving forward. I think that today's weakness, obviously, if you take a look at the market, all stems to the tariffs. But you had James Demert on just a bit ago, and I was chatting with him after he was talking with you. He says that Amazon's his top pick of the Mag 7 to buy on the dip, not necessarily because of TikTok, but just because of the fact that the PE is less than the growth rate, and also the fact that he says it's pretty immune to tariffs just in terms of its pricing power. So he's looking to buy the dip as well.
Wow. Yeah, he seemed pretty optimistic, pretty positive this morning. That was a refreshing tone to hear, of course. All right. I mean, look, some of this deal activity, I feel, is the market will kind of accelerate that, and maybe the IPOs will slow. Might get a little bit less juicy behind you there at that opening bell.
Well,
NASDAQ too.
Newsmax is here, so there are some IPOs, but I mean, when you say
what's
IPOs
Newsmax
slowing,
doing?
I mean, it's been a market that's been thawing and thawing for quite some time. We've been waiting for it to pick up, but
Newsmax down
might not
22%.
necessarily in this environment.
Newsmax down 20%. If the market does tighten up, the economy tightens up, likely to be more deals than big debuts. So stuff like this can definitely still happen. So we got to keep track of those stories. Thanks, Caroline. Appreciate that. Let's go to Joe Teague, portfolio manager of the Rational Equity Armor Fund. Joe, help us make some rational decisions this morning. What looks irrational here?
Yeah, well, there's a lot of irrational, definitely very rational to be a long volatility manager on a day like today. So I'm feeling fine, but the market itself looks very sick, Oliver. And you talked about these yields coming lower, these bonds looking great. You said the bond market looks like deflationary. I would have a different spin. I would say the bond market looks recessionary. So I think the bond market's very worried about the economy. They're thinking the Fed's going to lower rates, not because of inflation, but because of a softening economy and because
100%.
of job losses mounting.
100%. That's exactly what we were just talking about. I'm with you all the way there. I know you got a trade in Amazon. Is that the trade you want to do today, Joe, in this market? Or is that the trade that we asked you to do in this market?
I kind of feel very good about this trade, actually. It's a short-term long volatility, short-term short the market, but long-term bullish on the market, long-term bullish on Amazon.
All right, so it fits your macro thesis.
What's that?
It fits your macro thesis.
Oh, absolutely, of course. Yeah, long-term, I'm going to be bullish on the U.S. economy no matter what. I think we're going to get through whatever.
Amen. Joe Teague, let's go.
But the short term, we are shaking things up. And, we shouldn't forget this is also happening. This tariff shock is also happening at the same time. We're seeing a lot of federal job losses, too. So people were saying just the job losses themselves could have tipped us over and spilled over into a recession. We also having at this at the same time. So there's going to be some disruption. There's no question about that. And that's not going to be good for Amazon in the short term. Just in general, having a long volatility approach is going to be the way to go. I was paying attention to your show while I'm waiting to go on. I saw Tom talking about, maybe this selling could cascade. I think that's possible. I'd be watching the VIX though, Oliver. The VIX hasn't yet made a new relative high. Recent high is on March 13th.
Exactly.
We haven't gone over that. I think if we are going to see selling continue, a little bit of cascading, you're going to see a big flush out bottom with a VIX pop at the same time. That's what I'd be looking for in order to see a turn in the market. We have not seen that yet. So unfortunately, just the trend continues lower until something drastically shifts. There's certainly the possibility. I don't think anybody's discounting the potential that these tariffs might not even go into effect. We might say, hey, a little bit too much, or maybe just a negotiation salvo, and some of the bigger ones get taken down after it's talked through. So anything is still possible. We're very headline driven here, and the market's just bracing for volatility, and that's what I'm looking for in my Amazon trade here, and just really in the market in general, just having some volatility on protecting my investments. So in the short term, I want to own a 180 put in Amazon. In the long term, I want to sell the 150 in September in Amazon. I do that at the same time. That's a diagonal spread, Oliver. I can collect money to do that. Essentially, I'm covered to the downside in the short term. And I'm stopped out to the downside at 150. 150 is close to a 52-week low. I think it's 151 back in last August, I think it was, for Amazon. So I'd be very comfortable owning Amazon down almost 20% from here. These already low levels. So that's where I'd be looking to get back into Amazon if we do sell off further. And of course, I'm protected to the downside. Now, if we don't, that's great. I'll just be able to collect a very small amount of premium just while I'm waiting for the market to stabilize here.
All right. Well, you're going to get some lower prices for Amazon. It looks like we're cutting to new lows here. So that's going to be the, if you like it here, you're going to love it there trade, which I respect that. And I respect the optimism and bullishness on the U.S. economy. Joe Teague, Rational, as always. Thank you, sir. Perhaps one of the most appropriately named funds for the guy, Joe Teague, Rational Equity Armor Fund.